right, ladies and gentlemen, tomorrow is like the stock market Super Bowl. We have a lot to get into here in this video. I hope you are ready. AMC stock is down about 4%, not looking too pretty out there, at least for AMC. Your broader indexes, of course, are performing okay. What is new? Now, tomorrow could be a game changer, potentially, for AMC stock. We're going to get into that and what you need to know heading into tomorrow. Hit that like button and subscribe to the channel. Thank you guys for doing so. If you have not done so already and you are invested in AMC and have been invested in AMC, well, maybe you just discovered internet for the first time, or you've been living under a rock, or the YouTube algorithm hates us. Who knows? Maybe a little bit of both. Well, hopefully that changes today. Let's go ahead and jump into it. So AMC stock is down about 4% today. Yikes. Pretty rough day out there for AMC bulls. What's new? We're kind of used to being used and abused at this point. AMC stock is at $6.82 per share, down 29 cents here on the day today, which doesn't seem like a lot, but nowadays that's a lot for AMC. Now tomorrow, you're gonna have a crash or a massive rally. I think it really don't go any other way. Because where you are at, where the markets are looking at, Fed policy and different things, it's so disconnected compared to really any other time throughout history. So Goldman Sachs came out yesterday and says they expect the first rate cut in Q3 of 2024. Markets right now are split between Q2 and, well, technically March or May. Right now, the first rate cut's technically being priced in for May, but March keeps getting that priced in as well. This is what I want to highlight for you guys. The yellow line here is what the Fed has been telling the markets, what the Fed's dot plot has been saying. Ever since about July, August of 2023, you have seen basically the expectations for rates to get cut like once, right? You're expecting that one rate cut around that time, for around like August or so. Well, take a look. Take a look at where the markets are currently pricing in Fed policy by this point, by the end of 2024. So this is where the Fed expects rates to be. As of December 11th, we're pricing in 4 rate cuts. As of December 7th, you were actually pricing in 5 rate cuts. So right now, you're pricing in about 4 rate cuts. That's a big gap. Big gap in expectations. This is because of the dot plot. So coming tomorrow, the Fed is either going to confirm or reject what the markets are pricing in, because the Fed says 1 rate cut in 2024. The markets say 4 or 5. That's a big spread, okay? And we really haven't been this disconnected from the Fed in a long time. You really have to go back to 2022, where the Fed basically said we're gonna have to keep raising rates, and the markets were like, no, you're not, no, you're not, no, you're not. And then we get data that came out, bad CPI. Oh my gosh, bad CPI reports, things of that nature, and then markets were forced to get in alignment with the Fed. Now, if the Fed comes out tomorrow and says, yeah, we're only going to cut rates once in 2024, yeah, you could see an epic crash of equities. If the Fed says they're going to cut rates 3 or 4 times, that's great. If the Fed says any more than 5, which I think would be highly unlikely, then you'd probably also be in for some kind of crash event. Now, 2 things that really matter coming tomorrow. I guess multiple things, but 2 things in particular. The Fed funds rate projection for 2024 and the GDP projection for 2024. Preferably, in a perfect world, you would want to see the GDP estimates go higher or stay the same at the very least. And you would want to see the Fed funds rate projected rate by the end of 2024 go lower. So Basically, what we seen in June was 4.6% was where the Fed thought rates would be by the end of 2024. Well, the economy showed resiliency. So back in September, 3 months ago, the Fed said, yeah, rates are going to be about 5.1%. That would be one rate cut for 2024. The Fed also raised their GDP estimates for 2024, and that looks like probably the most realistic situation coming tomorrow. It seems like raising GDP estimates or keeping them the same for 2024 sounds pretty appropriate given some of the economic data that we have been seeing. So I'm not expecting GDP estimates to come down a lot. Let's say in theory they did to like 0.7 or 0.6%. Well, that would definitely be some bad news for our markets. Okay, that would not be great. So point is here, you want to see the soft landing narrative really get forecasted from the Fed. And with the soft landing narrative, you're going to need to see rate cuts in 2024, more than one. So I think we're going to get more than one rate cut from the Fed. But if the Fed only tells us 2 rate cuts, that's not going to be enough. I don't think to continue this rally higher. I think you need 4 or 5 rate cuts to continue this rally. If we get 3 rate cuts that are signaled from the Fed, maybe you just don't do much tomorrow. I don't think we're going to be in that camp. 3 rate cuts, slightly less than what we're pricing in right now with 4 rate cuts. So it wouldn't be too far off from the Fed, at least the market's expectations. So definitely that's the big story to be watching for tomorrow. You also want to watch the PCE inflation expectations, right, for the end of 2024. The Fed doesn't move these around all too much. Last we knew, 2.6% was expected for core PCE by the end of the year, 2024, and 2.5% for headline PCE by the end of the year. So if they move those, that'll be kind of shocking. The unemployment rate, we'll see what happens there. They have been lowering their projections. Now the unemployment rate is 3.7%. They probably will keep it roughly the same. So if the unemployment rate stays the same, if GDP stays the same, inflation stays the same, but we are expecting more rate cuts, that's great news. That could open up the floodgates for billions and billions of dollars to head into small and mid-cap stocks like an AMC. Should benefit dramatically if this outcome were the one that actually does happen. On 2 different fronts, right? There's a certain degree of quality that is important. I don't think all of your terrible companies that did well in 2021 are coming back. I just don't think so. But some of your quality names that have seen improved earnings, like an AMC over the past years, those stocks might do very well. There's a lot of names that fit that category. The names that I'm personally invested in. PayPal, been doing just fine. SoFi, been doing great. Fubo has been doing great. Snapchat for the better part has been doing okay, right? These stocks have actually been improving their earnings over the past 2 years, but due to the Fed raising rates, the fears of a recession and multiple contraction, you have not been able to actually see significant rises in share prices of these names, including AMC in that category. One of the big reasons as well is because there's just been so little allocation to stocks out there. Like the allocation to stocks is pitiful. If you take a look at this, let's go ahead and see. Whoops. This right here. Net fund manager stock exposure as a percentage of portfolio. So, if you basically look at this, 2022, the most hedge funds were net short that you have ever seen, right? Everyone was net short. Everyone was bearish for a good reason. The Fed was raising rates. Inflation was rampant. Well, I mean, if the Fed raises rates, then you're probably going into a recession. There was a good reason to be short. 2023 kind of exploded the expectations. Basically, all of Wall Street was wrong. Now, when you're looking at this chart, this is basically telling you that right now you're pretty break even. Like there's not really a net long position on our markets. There's not really a net short position on our markets. Just not a lot is actually happening right now. Now, if we do get confirmation from the Fed, then you could have a lot of room to rally here as funds do get rid of short positions and buy new positions. the net exposure to stocks will start to increase, right? Shorts covering on short positions, that's taking away shorting pressure on our markets, and new positions being initiated creates buying pressure on our markets. That creates this dynamic where a lot more funds start to go net long on our markets. Right now, it's basically 50-50, but over the past year or so, you've seen a lot of funds that have been short on our markets. So if Fed Jerome Powell confirms that maybe this is going to actually be the soft landing, maybe we're not going to get a recession, maybe the Fed is going to cut rates for potentially more times in 2024, that could send stocks soaring. And maybe that's how the markets are set up right now. I think there's obviously, like I said many times, a big difference between the markets pricing in rate cuts and the Fed telling us we're going to get rate cuts. I think you've seen some dipping your toes into the water, if you will, with just all of the money on the sidelines heading into small and mid-cap stocks recently, interest rate sensitive names. But I think when you actually do get the Fed that confirms this, that's where a lot more fund managers are going to say, this is actually real. The Fed is actually projecting they're going to cut rates 4 or 5 times. That's when I do think some big gains could be coming, really broad-based to a lot of your stocks that you might own, but as well for AMC. So tomorrow is an absolutely epic day. If we take a look at the economic calendar here, you are going to get unemployment rate out of the UK at 2 o'clock in the morning today. Really not going to be important. Well, actually, you already got that. My bad. You'll get GDP month over month at 2 o'clock in the morning coming out for the UK. Not really going to be important as well. At 8:30 in the morning, you're going to get PPI month over month for November. You're expecting 0.1. Last month it was negative 0.5%. I don't think this is going to be really a big catalyst for the markets at all. Could I be wrong? Sure. But is it going to move the markets? Probably not. Now, the Fed interest rate decision comes out at 2 p.m. The summary of economic projections also comes out at 2 p.m. So if you want a quick and easy interpretation of where the Fed expects interest rates to be, you can always come to the trading economics calendar and look at the interest rate projections here. 1 year, 2 year, 3 years, current and longer. So like 5+ years out. So that's really what is going to cause the markets to move. It's not about the decision, right? The Fed's going to pause. They're not going to cut. They're not going to raise. It's all about the dot plot and what Fed officials are expecting into the future. And then at 2:30 p.m., you're going to have the FOMC press conference. Be a little bit careful here because even if the dot plot is very bearish or very bullish, Fed Jerome Powell could take the opposite stance coming during the press conference, or he could really confirm a rally or a crash by just, outright just not confirming anything for us. So it could be a little bit problematic at 2:30. There is a lot of volatility at 2:30 as well, but I do think we're going to at least know how things are going to evolve in our markets, right? If the Fed is expecting 1 rate cut, still that's going to be really negative. Stocks are going to sell off based on that, and that's just the simple fact of it. If the Fed does expect 4 rate cuts like the markets, well, after 2:30 tomorrow, stocks are going to rally. And I don't think that's going to be stopped by anything Fed Jerome Powell says on the press conference. So go ahead and keep all of that in mind. And then on Thursday, you're going to get retail sales, export prices, and import prices. Those things will obviously affect the GDP outlook for 2024 as well. So this week, you're getting clarity on inflation, the Fed, and the economy. So by Thursday, we're going to have a lot better kind of understanding of where we are at in this cycle. Now, let's go ahead and take a look at AMC stock and the Ortex data here. Keep in mind, take some of these numbers with a big grain of salt, especially when we get to the short interest numbers. So today, as far as option activity, still one order totaling $265,000 with a positive order value of 0%. So nothing too crazy that is actually happening today as far as AMC options. you're down about 4%. So yeah, nothing is really happening in that regard. You do have a short interest of free float at 10.74%, $151 million worth of short positions currently. Days to cover 1.01, 21.23 million shares that are currently sold short. Shares out on loan 10.58 million, cost to borrow 1.18%, utilization of 25.28%, and a short score of 53.26 out of 100. So not the most encouraging numbers here, but still, it's one of those things where I don't believe the numbers anyway, so take it with a big grain of salt. And then if you look at the Stocko Tracker data, you got about 2,500 calls currently in the money. Out the money calls at 142,000. Puts in the money 1,400. Puts out the money 33,000. So definitely some activity here nonetheless on the call side. I think that could set us up pretty interesting heading into tomorrow as well, considering there's a lot of option activity just outside the money. For an example, at the $7 call, you have 18,000 for open interest, 27,000 for open interest at the $7.50 call, 21,000 for open interest at the $8 call, 10,000 for open interest at the $8.50 call, and 55,000 for open interest at the $9 call. So lots of activity for AMC stock here towards the end of this week. And I think, I mean, based on tomorrow, based on the significance of the dot plot, and hopefully the change we get, the Fed hopefully pricing in 4 or 5 rate cuts as well, with good GDP, good unemployment, really not moving those things around all too much, you could see AMC stock break out into the $8 range. If not, you're probably falling back into the 5s. That's my expectation, is just a big move towards the end of this week. I think the path of least resistance is probably higher for interest rate sensitive names, just because there's so much capital on the sidelines. And this will be the first time in quite a while the Fed might just outright say, we're going to cut rates quite a few times in 2024. And again, that could bring a lot of money into our markets. And I think AMC stock overall is just set up in a way that we should probably bounce here, right? The RSI at 40, that's pretty oversold. Not as oversold as we have been over the last couple of months, but still at a pretty rough place overall. Let me know what you guys think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.